Folks, Mike Newmeyer, financial advisor here in Owings Mills, Maryland. And although this is going to also appear on the video, my phone number is 410 902 0464. You know, we call our business retirement, a game plan for retirement, because that's what we do. We help people prepare for retirement and stay retired. And we work with folks after retirement on a continuous basis if they want help on a continuous basis. So, we're here. And I get a lot of calls from existing clients with questions, and I try to offer them help. I'm not a lawyer and I'm not a tax person, but I do help them with general ideas in those areas, things that I've done seminars on, such as estate planning and so forth, that I can give them general answers on, or refer to an attorney, or I can refer them to an accountant, which I've done a lot of, and so forth. So I want to share some ideas with you today, and also I want to address some questions that we have received on the telephone and by mail, or even by text. This is a special offer that is available today, okay? This is a 5.9% 3-year annuity. It's 5.9%. It's a plain fixed annuity, nothing particularly interesting about it, except that it's as good or it's better than anything you can get in a CD today. 5.9%, and it's tax deferred. If you have money in a CD, you get a 1099 every year and you pay taxes. This one, you don't pay taxes until you take the money out after 3 years. And actually, we have others that follow. This is actually the second one we've offered. So we had one that matured, and people are transferring the money from that one into this one, so it stays tax deferred. So it's not, in other words, there's no taxable event when they transfer. That's a pretty good deal, and it's short term. It's only 3 years. So if you're interested in this, give us a call, and we're more than happy to help you with it, okay? 410 902 0464. Call today. These things don't last. They offer them for a while, but they don't last. So if you want one, give us a call. Very good. Okay. So that's that. And also along those lines, we still have a very, very powerful retirement annuity, okay, that is paying, gives you a 20% bonus to start with, but the pay rates are great. And that's a really powerful thing. So, I'll be happy to explain that to you. You can start income on those as long as you're 59 and a half. You can start income, immediately. So that's available. And a lot of folks are taking advantage of that because of the high pay rates, higher than anything in the industry that we've seen. So I'm more than happy to help you with that. If you're getting ready for retirement, you can come in, I'll give you a quote, I'll tell you what it'll get you for lifetime income for you and your spouse. If you pass, your spouse will get it. And on the other hand, if you had to go into a facility, long term, after 90 days, whatever the income is that you're getting from one of these will double. So that's a big deal. And something that is offered with this particular product, and I'd love to explain all of that to you. Okay. Besides that, if you didn't start the income and you wanted to take 10% a year out without penalty, you could do that. So that answers a different need, but it's available. So give me a call if you'd like to talk about those things. Again, the 410 902 0464, Mike Newmeyer, and I'm here to help you. And okay, here's a few questions that came up. I'll go through a couple of these, and then I want to give you some more information. I had a question come up: should I put all my money for retirement into one product? It depends. It depends on how much money you're talking about. Does it make sense to split it up? And I'll be more than happy to give you an assessment and some advice. Sometimes it makes sense to leave some money in the market. Sometimes it doesn't make sense. Always you should keep money on reserve for a rainy day kind of event. So, I'll give you ideas about all those things when we do a plan, which is very important Could be a very simple plan depending on what we're dealing with. But we need to look at insurance. We need to look at how you're planning your long-term care. Who's going to help you? Who's going to take care of you? Should you use life insurance to help with all of that? To pay your family back, as an example, for any care that they might provide you. There's all kinds of questions. And what about Social Security? The biggest question I get is it going to be around? Now there are issues. We know that the fund is going to run out of money at a certain point. However, as we change our priorities in the economy, when we get away from giving all our money away to foreign countries and supporting all kinds of wars and so forth, okay, then hopefully the administration after the next election will be one that starts to take care of us. And that would mean putting more money into the Social Security fund. It's absolutely a travesty that has not been maintained. And also along those lines, refilling, that is putting more oil in reserve. We're using up our reserves in oil just to artificially reduce prices. And that looks to me like it being done for the election. But in any case, we need to rebuild our economics on a national basis and quit spending all our money, because that's where the inflation comes from. The more money in circulation, the higher the prices go, because there's more demand. Okay, there's more demand, or even if it's only the same demand, when prices go up, when there's more money in the market, in the economy, the prices go up. That's where inflation comes from. Supply and demand, and the amount of money that's circulating in the economy. Okay, so that's another question that I have here, is all about inflation. It's all about inflation. We keep building our national debt, and as we build our national debt, inflation is not going to get under control. So we've got to solve those problems, and so those are some things. But we will get inflation under control. Do you remember how it was before, in the past administration? Our inflation was next to nothing. It was like 1.5%. Now, of course, we all know that when you go to the grocery store, that's our inflation. The government may say that, it's only increased by 3% or 4%, but they mean over the increase that was already there. We know that groceries, as an example, have increased about 15%, and some items in the store are more than that. So this has been tragic. But anyway, it will come under control. That's my prediction. It will come under control. And let's see, on the Social Security thing, to think about is this. And I had a couple in here a couple days ago. The gentleman is 60 years old, and he's not going to wait until he's 67 or 68 to start taking social. And my advice is always this: if you're going to retire and you need the money, almost if you don't need the money, but if you need the money particularly, take it early. Go for the 62, go for 63, go for 64, 65, whatever it is. You'll find out that whatever money you leave on the table, whatever money you don't take early, okay, it's going to take a long time to make that up if you wait, okay? And we don't know how long we're going to live. But if you started at 62 or didn't start it until 67, let's say you had 5 years you waited, that's 60 checks you did not get. Think about it that way. Find out what those checks would be, and then you'll make a sensible decision. How can you find out? You can go to Social Security. I always say go to the oldest person there that looks like they've worked there the longest, because they know what they're doing. You can go on ss.gov and open an account where you can look at your benefits. You can do that. Or go to the office, the Social Security office. So those are a couple of things that you want to keep in mind. And then they asked me about Medicare benefits. I also want to talk a little bit about Medicare. Medicare will also have to survive. It will have to survive. And I always say those people in Washington won't keep their jobs if they don't take care of Social Security and Medicare. But now let me add this. So Medicare starts at 65. When you get close to 65, go to the Social Security office and talk to somebody about Medicare along with Social Security. As I indicated earlier, you can go to ss.gov or I say go directly to the Social Security office and talk to a human being. Now, Medicare, it comes out of your Social Security, of course, each month. But what you want to think about is adding Medicare Advantage. Now that you're going to have to pay for by your, on your own, as I do. And Medicare Advantage takes care of the supplemental that you would have to also buy. So it is a supplemental, but it's more inclusive than an average supplement. I would say it's probably the best of the supplementals. So look at where Medicare Advantage is offered. It's offered in a number of companies, but just look what's available. Okay, and not going to be hard to find. So that's that. And then let's see, what else did they ask me? Well, they asked me about inflation. I think I've talked about inflation already. So I'm happy to answer more questions about it if you call me. And again, it's 410-902-0464. And if you do that, whoever answers the phone will write down the question, and then I'll address it, in the podcast. Let's see. There's a couple of things I want to share with you. I subscribe to this report, and it is the Kiplinger tax letter. So I want to quote them. They're the ones that put this together, not me. Okay. And this is interesting to some people. Can I use 529 funds to pay for a college student's studies abroad? Interesting question. Now, you need to have your tax person answer this question. The general answer is in some cases, maybe even in most cases. But it's something, if you've got a 529 plan for your child, then you want to talk to your tax person about using it if they want to go to school outside the United States. And the other next question I thought was very important, very timely, and very effective. It does affect people over 60 years old. And that is, I'm planning to take out a reverse mortgage. Do I have to pay taxes on the money I get from the reverse mortgage? And the answer is no. It's a very simple reason, because it is a loan. You do not pay taxes on borrowed money, okay? So you're not going to be paying any tax on that. So that's pretty important to also understand. And I think those are the only two we're going to try to cover today. So those are just some ideas that I hope help you. And, I'll be recording more, of course. I've been on vacation, as I indicated earlier. I'm back here working on these things, and I'll be doing a lot more recording. Call me if I can help you on anything. I'm getting a lot of calls from our existing clients, but I'm more than happy to take new clients. I've got time to do that, and I'll meet with you at any time that's good for you. I'm even seeing people on the weekends now because it's just I've been too busy during the week. But I still have time. I'll make time during the week, or I'll make time in the evenings, or I'll even make time on the weekends, okay? So call me if you want to do some planning. If you've got a rollover, you're getting ready to retire. You may have an old rollover that you've done nothing with, but that's very common. I'm more than happy to evaluate it and show you some alternatives, and maybe you'll qualify for the bonus and the really, really good payout rates that are affecting lifetime income. Okay? Okay, folks, remember, call me, 410-902-0464. Meanwhile, take care, and I'll talk to you soon.